Good afternoon and welcome to the Market Close Report for Wednesday, the 17th of June. Well, the Aussie market actually did well to finish higher today. We had the ASX 200 lifting 48 points or 0.5% to 8,966. It doesn't sound like a big lift, but there was actually quite a significant swing from low to high. So at the worst levels this morning, we're actually down by 0.66%, and then we bounced back from those levels. And it's actually similar to the recovery that was staged yesterday, and that was thanks partly to the Reserve Bank keeping interest rates on hold after 3 consecutive rate hikes, but also it was a unanimous decision. So all 9 voting members that decide what to do with rates at the Reserve Bank each time they meet decided to keep rates on hold. It was actually the first unanimous decision at the central bank since they actually raised rates for the first time in about 2.5 years, and that was back in February. So what this means is in 4 days, our share market has rallied by close to 4%. We've also touched roughly a 5-week high today, and we got pretty close to that psychological level of 9,000 points as well. Of course, the major catalyst in recent days has been the US and Iran reaching that interim deal, which could lead to the reopening of the Strait of Hormuz as early as this Friday. That's when the deal is expected to be signed officially. The US market's a tad on the cautious side last night, but that is understandable considering that there are still a few things up in the air in those deals and negotiations. But also we've got the Federal Reserve meeting tonight, and this is the first Fed meeting under Kevin Warsh, who is the new boss of the Fed there. So the market less concerned about the decision itself, because market reckons that's probably going to be a non-event with rates on hold this time around. But what's going to get more attention is what Kevin Warsh signals for what's ahead, considering we're going to be seeing a lot more of him in coming years, in fact, for the next 4 years over the term. And I will just quickly touch on SpaceX as well. Managed to lift over in the United States for a 3rd consecutive day. It actually briefly became the 4th largest company on the US share market, surpassing Microsoft and Amazon as well before it just kind of cooled. But still, with a market cap of about 2.66 trillion US dollars at the moment, it actually makes it bigger than the entire Australian share market. That's, of course, around 2,000 companies or so. Now, as far as the sectors are concerned today, a mixed bag. We actually got off to a much slower start where we just had the mining sector higher, but those gains spread to the majority of sectors, so 8 of 11. Mining stocks very much being boosted by at least some commodities. Gold miners in particular played a pretty big part. We'll get to that in a second. But basically what we've seen is a 20% lift in the gold mining sector as a group in just 4 days. And that's partly because recently the US dollar has been softening a bit. There have been fewer worries around inflation and rate hikes, and that's driven gold prices higher after a bit of a difficult run over the last few weeks. We've also seen some underperformers. I mean, energy stocks down about 2.3%. At least, that was to be expected considering that oil has fallen 6% in a day, but about 15% lower in just 4 sessions as well. So oil prices roughly the lowest they've been in about 3 months. And the explanation there is it's basically in relation to that US-Iran deal, which could just, I guess, help oil supplies gradually pick up over time. And then some of the defensive areas, the utilities and consumer staples under pressure. But outside of those, we had improvements everywhere else, with the standouts today, certainly in that tech space. If we look at some of the individual winners, though, I mentioned gold, and that remains certainly the standout across the board. Resolute Mining, for example, was up 8.5% today, but also Sims Metal rose close to 2%. This is a metals and electronics recycler, and it upgraded its profit goals for the year by about 14%. And the last time it made estimates was 3 months ago, so it was a decent lift there. It cited things like trading conditions that are improving and also demand for decommissioning old data center equipment, which could help. And Flight Centre and many of those travel agents and travel stocks did really well, boosted in part, it seems, by the federal government removing its do not travel advice on a number of Middle Eastern countries, but more importantly, perhaps the fact that there could be oil flowing through the Strait of Hormuz, and that could put downward pressure on cost when it comes to fuel. So Flight Centre was up, but also managed to shake off a profit downgrade by the group, where it did certainly say that there has been disruption caused by the Middle East conflict, so it's cut earnings guidance, but at the same time it kept investors hopeful that a US-Iran deal could give it provide a bit of a tailwind. And then ARN Media up in the order of 31% rather, or close to it. This is on news that it's settled its legal proceedings with Kyle Sandilands. So it's agreed to pay about $12 million in cash, amongst other things as well. As far as the losers go, certainly energy stocks underperformed. Karoon Gas was one of them, 13.4% lower. Now, it received some broker downgrades today, and a reminder that yesterday it cut production expectations by about 10% for the year because of some operational issues. But then other energy stocks like Whitehaven Coal down about 2%. Woodside also fell. And some of those defensive areas like the supermarket chains, Coles and telcos like Telstra were underperformers as well. So looking forward from here, as I said, the big news tomorrow morning or tonight is going to be the Federal Reserve. So all eyes will be on Kevin Warsh. That's probably going to receive some headlines tomorrow. But we also have a key update on retail spending in the United States for the month of May. So this will show us how much people are spending at the shops. And in addition to this, there is a weekly update on crude oil inventories, how much oil's currently being held in the US. And that's something that can also move oil prices around. So that will be another thing to watch. Locally today, tomorrow rather, not much that's scheduled. We do have ResMed paying out a dividend and AFT Pharmaceuticals trading ex-div. But let's look at currencies, because the Aussie dollar sits at about 70.5 US cents. It also softened a tad against the euro and also the Japanese yen. On that note, have a great evening, everyone. See you tomorrow.